Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today is Thursday, July 31st. A late sell-off knocked the stock market sharply lower before closing near its worst point of the session. The Dow and the S&P 500 finished 1.8% and 1.3% lower, respectively. The Nasdaq closed with a modest loss. Thursday's loss concluded what was an overall pessimistic session. The tone was set early on after disappointing economic data was unveiled. According to the latest government data, the U.S. economy expanded 1.9% in the second quarter, missing the 2.3% gain economists were expecting. Though the top line of this number is a bit disappointing, its downside surprise is due to a negative impact from inventories. What is more, trends in consumer spending, business investment, exports, and government spending were generally better than forecast. Many Wall Street pundits and economists believe the U.S. economic growth will not return to its full potential until housing has successfully turned around. Former Fed Chairman Greenspan stated in an interview on CNBC that home prices are nowhere near a bottom. He also acknowledged that there is still a 50-50 chance the U.S. will experience a recession. Meanwhile, the Wall Street Journal reported Treasury Secretary Paulson also noted that housing is still correcting, but the fiscal stimulus has helped economic growth. Adding to the dour mood among participants, jobless claims for the week ending July 26th climbed 44,000 to 448,000, marking the third time in the last 5 weeks claims have surpassed 400,000. Continuing claims rose 6% to 3.28 million, while the 4-week moving average jumped to 393,000 from 382,000. In the end, the disappointing economic data trumped relatively upbeat earnings data from several widely held companies and lower oil prices. Altria, Disney, MasterCard, Visa, and Tyco all reported upside earnings surprises ahead of Thursday's opening bell, but their performance during the session was mixed given broader concerns. In other corporate news, S&P lowered the ratings on Ford and General Motors to B- from B and said it will not be changing their outlook on the pair within the next year. Research in Motion and IM-Clone moved appreciably higher, helping the Nasdaq spend the majority of the session in positive ground. IM-Clone received a $60 per share bid from Bristol-Myers Squibb. Meanwhile, oil giant ExxonMobil posted its largest quarterly profit in its history, thanks to record oil prices, yet the results still fell short of the consensus earnings per share estimate. Its shares fell as a result, making it the primary laggard in both the S&P 500 and the Dow Jones Industrial Average. Oil prices fell more than 2% to finish near $124 per barrel. The downturn, coupled with Exxon's miss, made the energy sector the worst performing economic sector this session. It finished 3.4% lower. The decline in oil prices helped spur interest in inflationary sensitive areas like U.S. Treasuries, since softer inflationary threats makes fixed income securities more attractive. The benchmark 10-year note closed 24 ticks higher. I'm Jeffrey Ham for Briefing.com. Thanks for listening and have a great evening.